Okay, welcome back everyone. So let's continue then with the question and how you would actually then fill it in a test. Now, your first starting point before you even start a question. So what you had to do is you had to go list the main components in your tax framework. The reason for this is because of the fact that they specifically asked in the question that you put it in the tax framework format. So, because of the fact that you don't necessarily know how much information you would require, what I would suggest you do is you write down the gross income, your exemptions, less allowable deductions. Now, normally the gross income does not have that many items, so I would leave open about 10 lines. For the exemptions, I would then leave open about 2 or 3 line items, and then for the allowable deductions, that is generally where the bulk of the calculations would be. I would leave open about half a page. So then what you do is you write gross income less exemptions to get your income less your allowable deductions, and that would give you taxable income. Now, because they asked for the taxable income, you only have to list those components. You can see in this question, we do not work out the normal tax. We do not take into consideration if there's any prepayments to work out the tax liability. So that is where you had to stop your calculation. Now, based on the question, if I just load it up here again, our sales amount was 11,250,000. Our rental income was 72,000, and our lease premium was 15,000, and government grant was 5,000. So what you go do is you include the sales amount, the rental income, and the government grant amount based on your information in that table. Now, we all know that government grant is exempt. So what you had to do is then go do the exemption at the same time. Now, what I told you guys is you need to show the in under your gross income as well as the out under your exemptions. You need to show that amount twice in your calculation to actually get the marks. If you in this test gave me a 0 and you explained that the amount is exempt from tax purposes, I gave you the marks, but you were technically required to actually show both in terms of the framework calculation. Now, if we go back to the question, the next items was your restraints of trade payment, which was the 437,500. Now, how you had to do the restraints of trade payment. You have to show the calculations based on the 3 years, which is in terms of the Act, and the restraint of trade payment in terms of the contract amount. So in terms of the contract, it was over 4 years. Then you deduct the lower of the two. So you could have shown the calculations like this, or alternatively, if you wrote down, it would be the longer of the two periods of 3 years, or the actual contract dates of 4 years, and then only gave me the amount. I would have provided you with the marks as well. Okay, so a mark was assigned for doing the calculations, and then a mark for deducting the lower of the two amounts for your restraints of trade. Sorry, this is 335. Okay, so what happened is a lot of students did not even do this calculation. They just deducted the full amount, and then you would have lost both of these marks. Then the next item was your purchases, which relates to point number 5. But if you do the easy stuff first, you would have deducted the rental payment, the contributions to the medical aid, your employee salaries. So let's quickly plot those ones in. So the rent paid, your employees' medical aid, and your insurance premiums. Okay, now if we move on to the purchases, which is point 5 first. Let's scroll down to point 5. So we said for purchases, any cost that we incurred in bringing that inventory to our business will be deductible. So you first deduct the actual purchase amount of 562,500. Then we deduct the handling cost, which is 2.5% of the original cost. Then we deduct the freight amount of 102,500, and then the import charges as well of 15%. Then the additional information, the closing stock, we add back the closing stock because we still have it on hand, so we cannot claim that deduction. We haven't actually incurred it as yet according to these rules. And then we deduct the opening stock amount. So let's go plot that onto our calculation. So your opening stock, you deduct the 350,000. You deduct the purchase amount of 562,500. Your handling cost, which is the 2.5%, which worked out on 14,063. If you showed the calculation and you made a mistake in working this out, I still gave you half a mark for the calculation, and then you lost half a mark because of the fact that you made a typo. Then your freight charges, they gave you the amount of 102,500, and then your import duties based on the calculation was 84,375. Okay, so you can see just based on this alone, not even taking into account the opening stock, is already 5 marks by just applying that basic principle. Now, the closing stock, they've added under your gross income because it's added back. But if you showed it under the allowable deductions as a positive, I still gave you the marks. Okay, so that is your purchases and the stock components with that. Okay, so let's move on then. Bad debts written off so that you are allowed to deduct because of the fact that there's no further information that indicate that it would not be allowed. Life insurance paid for the 3 directors, you are allowed to deduct it. The speeding fine is prohibited in terms of section 23, so that should have been a 0. Okay, so let's go fill in that information. So the bad debts written off was the 100,000. Your billboard was the one after that. So the billboard and the erection cost is not deductible because it's capital in nature. It's creating an enduring benefit. Your annual advertising cost was deductible for 62,500. Sorry, this was. Then your fines paid is prohibited. Okay, let's quickly see what was the other expense. The life insurance paid for your directors. Let me just see where I put that. Okay, we've already deducted that amount. Billboards. Okay, bad debts written off. Okay, and then point number 2 was our doubtful debts. Now the doubtful debts, you add back the prior year. So that 50,000 we added back, but because 20,000 was more than 60 days and the remaining was 120 days, 20,000 would have been based on 25% and 30,000 would be based on 40%. Now that prior year one, you add back under your gross income. If you included it under your general deductions, I also gave you the marks if you added it back. And so this is how the calculation would have looked. And then the current year would have been the full 87,500. But because everything is older than 120 days, you would apply the 40% as opposed to the 25%. And that would have been a deduction for 35,000. Then your repairs to manufacturing building, because it related to normal repairs, that would have been deductible. And we said the legal fees related to the importation of your inventory, which would also have been deductible. So those ones you just deduct normally. And then we had, let's quickly see where's the salaries. Employee salaries paid, I forgot to include that one. So the salaries paid is deducted for the 1.875 million. Okay, so that is the deductions. Now the last step that we had to do for the donation, you first do a subtotal by adding, sorry, this is the income. So by adding your income and then subtracting all of these liabilities from that amount, you work out what is your taxable income from your income activities. Then your 10% for your donation is limited based on that amount. Now, you would have received a method mark for stating that this deduction is limited to 10% of whatever you worked out here. You would have received half a method mark for doing this calculation. So it didn't matter what amount you received. You were not penalized for not getting the correct amount. You would have received the mark for applying the method of how to do the calculation. Now, a lot of students did not do these two items, so you lost a mark and a half for something that is not really that complex. Some students that ran out of time put an amount in here and then stated this, and they still got the amount for just doing that step by showing that subtotal and then showing the limit of the 10%. Now this is the maximum you can deduct, which would have been 770,000. But because the actual donation is less than that amount, we are only allowed to deduct what we've actually incurred, which was the 10,000. So a lot of you showed this and received the mark for deducting the 10,000. And then the last step was just adding it all together. So taking that 7,703,563, deduct the 10,000 to work out what is the taxable income, and you received half a method mark for doing that total. And that is basically, in a nutshell, how you had to do question number 2. Do you guys have any questions on any of the components in this question, or just any